Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will talk on the euro currency as usual, but today is also very interesting fundamental report that we have prepared because finally investors start to pay attention to pure economical data, pure economy events that's going on right now on the markets, and this is like the just fresh air breath after all this news that's dedicated to the virus and first, information from the analysis agencies and the best analysis agencies starts to appear on the perspective of the global economy, on the perspective of the United States economy, and even on the short-term data that we should get in the coming week. So as this week was mostly under the sign of the measures that come from the Congress, the $2 trillion supporting to the economy, as on the measures from the Fed. Later, it was the statistics on the PMI and the jobless claims. So you probably saw that jobless claims just jumped on unbelievable levels on the 3 million calls for jobs in this recent week. So this is a bit less than it was in 2008, but it's still very strong. And the next week, it will be under the sign of the non-farm payroll release, because as expected, the payrolls should drop for the 293,000. So that will be the great drop since the 2009. That is the actually what the investors' polls right now shows. So on this background, it seems that the result of this epidemic is yet to be calculated, yet to be estimated. And even for the best analysis, this is really the challenge. So we are not smart enough because we can't operate such strong lot of data to calculate all these trends in the global economy. And all that we could do currently is just to keep nose to the wind, free space for big sharks, and to follow slightly behind them, to not trying to catch the falling knife and to catch the reverse market. All that we need to get is just step in on the major retracement when this reversal will happen. That's our task. So we are not the rivals for big sharks. We are just trying to follow it. And from that standpoint, we even do not dare to predict the long-term trends currently on the markets. So trying to focus on the economic statistics that we have. So significant drop in employment, significant drop in sentiment across the board in Europe, United Kingdom, United States. Drop in unemployment, but still it's not the same as in 2008. So you could just read about it in our weekly report. It's not really too significant. It's not too big to read. It's a lot of interesting stuff there. We're focused on the technical picture in this video, what we will consider on the next week. I just would like to remind you first that in the last week, daily trade, well, we discussed some possible trading scenarios on the daily chart, particularly speaking the bread and butter trade, we consider it for the week. But in a longer term picture, the daily chart should work as an indicator. Because if you remember in the weekly chart, we said that we need to keep an eye on the pullback. What the pullback will be. If market will break all the resistance the way up, it could tell you that market is preparing the reversal instead of the downward continuation. Because here you could see the widening triangle is forming, and it could be finalized into the diamond shape or something of that sort. All could show the direct breakout. And currently, it seems that we're standing with this process. It's based on the performance that we saw in the last week, and we have talked about in our daily updates. So if you remember, market has broken through the confidence resistance and the condition of the verbot, which is definitely not the retracement type of action when the market responds even on the weekly oversold. That should not happen. It's responding on the weekly oversold. The market breaks the confidence, being in the condition of the verbal. That's something different. Even more later, this response was very small on Friday. If you remember, we suggest that it could be the hand and shoulders, but fortunately, hand and shoulders has not been formed, and we just escaped another negative trading situation. And market jumped right to the 6-point resistance. So theoretically, currently we stand in the condition of the daily bearish stretch by the Jordan Apple, because market stands at the verbal, right at the major resistance. But taking into consideration all the stuff that we see, we call you to avoid and escape the possible taking the short positions on the market. Of course, we can't forbid you to do this. So you could follow it. Maybe it will be successful. But in general, in the context on overall price action that we see within the recent 2 weeks, it seems that it would be better to follow the major tendency. And the major tendency on the breakout of all resistance levels tells that market is returning back to the 1450 area. That's our short-term target. So we are not considering right now the action above this level just because market stands at the overbought already on the daily, and that will be also the overbought on the weekly. That's why most probably that market will stand inside of this range on the coming week. In the current circumstances, we do not want to take any short positions. What we would like to do is just keep an eye on the possible pullback if this will happen, and then consider possible taking the long position. So, for example, on the hourly chart, market is coming to the major XOP. So if you remember, we considered this ABC repetition already. This was the OP target here. Now market is coming to the XOP. XOP creates an agreement with the daily fib level. It's 1156. On the daily, this is 1167. So that's an agreement. And this is, at least the chances exist that it should be the pullback. On normal conditions on the market, that should be the pullback with a 100% probability. Currently, well, I'm not sure, but we will hope that this will happen. If this indeed will happen, we consider some support levels, and one of them is 109.25, 109.55 confidence support, where we potentially could consider the possible taking of the long position. If you would like to trade this, all this stuff, you could, but please follow the same trading plans on Friday. So if you remember, on Friday we said about the hand and shoulders. If it will be formed, we try and take the short. It has not been formed, and that's why we haven't taken the short position. And that's great, because later you can see market just continue upward action. If this time you still would like to go short, please wait for a clear bearish reversal pattern. For example, maybe finally here the hand and shoulders will be formed. In this case, you could try to take the short position, but be extra careful. We, in turn, mostly are focused on the taking of the long position here, and that's why we will just wait for retracement. That's approximately what our trading plan for the coming week. And finally, as I said, the thing that we will keep an eye on is, of course, the ADP report, non-farm payrolls release that we will get on Friday next week.